Should we go long? Should we short? Or should we do nothing? I went to AI to try to get us an answer. So we will start today a little bit different. Listen to this conversation I had with AI to tell you how the machines would deal with it, which are emotionless. So I went and I asked for giggles, if you came across $1 million and someone asked you if you want to invest the stock market this week, what would you say in a very short paragraph? AI answered, by the way, this is Grok, an expert version of Grok. It said, I'd chuckle and it would say, sure, let's dive in. So I said, would you invest all of it? They said, absolutely. They would do it 60% stocks, renewable energy, AI, and for growth potential, and 10% wild memes, and 30% in bonds or cash equivalents, so something that earns fixed income. I said, would you dump the whole thing all at once? It said, no, don't be silly. I dollar cost average over the whole week. So I was like, wait. You would dollar cost average in 5 days? Yes. So I pushed back a little bit on the dollar cost averaging all in 1 week. I said, basically, I would expect it to be over time. It said, nope, I'm holding firm. I would do it all in 1 week. There's a study out there from Vanguard that says if you invest all in one lump sum, you would do 65% of the time. Not really clear at how they measure that. Better than dollar cost averaging over a period of 6 months or something like that. In a portfolio of 60-40, which is almost what AI proposed it would do. So I thought, okay, let's drill down there. And I said, okay, so did you ever consider valuation before you made your decision? And two, what would you tell Warren Buffett to convince him to deploy his $300+ billion? It said, absolutely, I looked at valuation. I know that the S&P is running hot. That's it saying that. Therefore, that's why I picked the sectors I picked because of the growth, and the meme stocks are the speculation. So it said, yes, I did, and I still came to the same conclusion. And then it would tell Warren, Warren, old friend, these are the words it chose to say, with your 350 billion cash fortress yielding safe but snoozy T-bills returns, why not sprinkle, key term, some into AI stocks like NVIDIA, Broadcom, and markets may be pricey overall, but these sectors scream moat meets future. That is a pushback against his mantra of business. He likes companies with a big moat, like barrier to entries, so they would have a baseline from which they can grow. Pretty clever AI. And then it even mocks him, kind of like potentially outpacing your index hugging style while keeping that value investor soul intact. Diversify beyond banks and Apple. Ooh. The universe is expanding faster than inflation. I don't understand that last sentence. Maybe you do. Let me know. I can't wait to see your comments, by the way. So I said, sprinkle, you say. You're throwing it all in 5 days. Why don't you follow the sprinkle concept that you said to Buffett? It basically told me, don't be silly, Nick. If Buffett doesn't sprinkle, he's going to change the market because he has so much cash going in, and he would drive prices up, and that would be correct. It said my million wouldn't make a dent, but his money would. You can see I'm playing the devil's advocate, and it had an answer that basically says, yep, whatever, buy. Yep, whatever, buy. So I said, okay, so what do you have as far as a hedge? It said, I told you I'm buying 30% in bonds or cash equivalents, and those would be my hedge. So it basically said, I'm only risking 60% of my portfolio tied to equities. As you can see, the answer from AI was to buy and get engaged. And it gets down to the level of risk appetite. For me, it's an easy decision. The number one goal of investing is not to lose money. And if I can delay my entry with the so-called $1 million scenario here by a few weeks or months, I don't think there's a lot at risk there, missing out on another 5% of upside, especially when I'm making 5%. So let's say the market rallies 10 and you put them in the so-called boring 5%, 4.5% yielding other venues, you're not missing much. And for me, that is a more acceptable scenario than deploying the whole million like the AI wants to do, and then having to deal with backtracking if something doesn't play out to perfection. Hopefully this brings up the conversation so you can really tussle with your own self, because this is a very personal decision. The fact is that the markets are rising on a momentum trade in a very steep rising trajectory. We'll jump into what to expect next week, and we have a bunch of Fed heads speaking. We also have Fed chair speaking again on Tuesday. Not sure why. Inflation information. I will jump into charts right away, and I'm going to talk about the S&P. The white box was the forecast for last week, and you saw how we closed right at the top of the forecast. So the bull won the week in every shape. I'm keeping a track of this because it shows us physically how this week we have established the prior boxes, the ranges, as potentially support. You can see how we tested them on Wednesday with the Fed decision, and we bounced right off. So imagine if we have a dip this week, it will approach the same levels, anywhere between 65.80, which was the target for so many weeks, remember? Now it's become a zone of support. I wouldn't think that there is anything to worry about until we lose 65.50 SPX. We will switch over to the NASDAQ, and you can see this is a record. We have the mega caps contributing heavily on Friday. There is a weak spot in the chart, but it doesn't come into play until we come back to 594 to 593 zone, maybe even through 592. This rising wedge is vulnerable if we don't come out of 602 to a small drawdown that could take us down to 593 zone, give or take. Finally, the IWM did break a record, and let's see if they want to come back down and consolidate. Like, do they want to come down to 240 and establish better footing? That would be great. On Wednesday, we had an emotional reaction to Powell. One was negative and then was positive, and then the next day was even more positive. Consider this an emotional reaction from Wednesday, and let's see what they do with it. This is the biggest disappointment, the TLT. One would think that a series of rate cuts would cause this one to skyrocket, but apparently they had skyrocketed beforehand, anticipating the rate cuts, and they were a little bit disappointed, like the market were on Wednesday. The market got a boost from the rhetoric. These guys didn't. This is the price of the bond versus the yield it pays.